Hey everyone, and welcome to 2019, and welcome back to another round of Stock Talks. Hopefully these set of Stock Talk videos will continue to help you in terms of what I feel the market will do, give an impression of market trajectory, as well as providing some technical analysis along the way. So hopefully these analyses help you. And let's talk about the SPY chart, or the S&P 500. And this is the chart that we usually start with on the yearly chart to look at broad market movement. So here is the S&P 500 SPY. And what we've seen in what we left off in the past video, which was done last week, was a continuation back to the upside after a support level of 235. And what we've seen is, for the most part, we've seen the continuation occur. Now, we got some news last night after market. So if I take you to the intraday chart for the S&P 500, what you can see is after market, got some news about Apple, its guidance, its lowered guidance, its lower sales, and hence we had the drop in the NQs, or NASDAQ. And this really happened pretty much all night, from post-market to pre-market, and then we continued the sell-off initially, tried to recover to the peak, was unable to, and we closed at the low of the day. So with the exception of today, we had a nice continuation back to the upside. So the big question here is, are we done with the rally? So that's a good question. Let's put off to the side for a moment and let's look at the technical side of the charts first. Now, when we left off last time, you might see I've readjusted some of the resistance support lines, and the reason is that I did this last week, did it for the members of the site, members of the course, that is. And what they received was this. Now you can see that the resistance zone is from 254 to 258, and that continues to be my resistance zone. Now I'm wary of what's happening right now. Okay, the market is weak. The market hasn't bounced yet to my optimal resistance zone, and it seems like we're going to be moving on lower. We couldn't even hit the 20 period moving average, which is obviously sloping lower, and it's situated right now around 253.50. So that's all well and good. We can't even hit the 20. That's fine. But my point here is that we've had a pretty oversold, and this was a consistent basis. This is 8 or 9 consistent red candles, 3, 6, 9, 10 consistent red candles, right? And we had a pretty big sizable sell-off, and it really exceeded my expectations of how much we would sell off. Now, so what you can see here is that we've rallied back, but right now we're coming on lower. Now, my target continues to be the resistance zone, and we haven't hit that yet. So I think there is a chance that we can hit that in the near future. But keeping in mind, in my opinion, that the line in the sand has to be the low of the day of 233.76. That's the low I would be looking for. What's really not panning out right now is the time factor that's involved. While we rallied back rather quickly, we're also making that transition back to the downside a little quicker than I initially would expect. So I think there is the potential for the S&P 500 to start perhaps go a little bit sideways before hitting my target zone. But we'll just have to be monitoring this as we progress forward. Yes, the near-term trajectory seems to be that it's pulling lower, but I would want to caution you, because in the past, let's take a look at this where we've came on lower, right? And what happened was we bounced off that low and then retested a high again. So I'm not saying that this is definitively that we're going to be pushing all the way back to 233.76. All I'm saying here is my opinion is that there is still a greater potential, in my opinion. Remember, it's all about probabilities in the stock market. Especially if you're looking at more near-term outlooks, it's all about probabilities, and the probability, in my opinion, still has a slight increase in terms of reaching our resistance zone before coming down to 233.76, but we'll have to be monitoring that. You guys know that the current market sentiment is a lot of it is headline driven. A lot of it is news driven. So tomorrow, I think Powell's speaking again, and you can imagine that's going to be news driven again, whether it's going to be hawkish or dovish. So we'll have to keep that in mind tomorrow. Now, once we get to that area, if and when we do get to that resistance zone, I would be looking, of course, at 263 as my next resistance target. The reason being here, this was a significant support area in the past that was broken, and when that breaks, that previous support becomes the new resistance, as we all know. But so far, we're still pretty oversold. So we'll have to be monitoring this as we move forward. Now, let's take a look at TVIX or volatility. TVIX had a pretty nice run today of 9%. But what you want to see here is that when we reach a potential peak, and look how many red candles we had consecutively, which is nice to see in terms of volatility dying down. But as long as volatility, in my opinion, remains elevated over the $54 level for TVIX, that's pretty scary for the markets. It's not healthy for the markets. And, you know, that's why we can have these 600-point drops on the Dow and still have volatility only climb $9. But, you know, that's still a pretty significant drop, given that the NASDAQ, you know, went down 3%. All the indices went down over 2%, with the exception of IWM and some other sectors. But, you know, so here's the deal. While we have a green candle on TVIX, right, our trajectory continues to be pushing lower at this point. So we expect this to be pushing lower rather than higher. Now, if we start breaking and closing, in my opinion, above $79 or $80 at that point, the story will change. But until then, I think this is still likely to push lower. And you can imagine, you know, something is off a little bit today. Look at TVIX today, only up 9%, but the indices were really down quite a bit. In a day in which the indices were down greater than 2%, wouldn't you expect volatility to increase what? At least 10%, 15, 20%. It's a little bit unusual to see volatility not reacting as much as you'd think. So that's something to note. I think there's two sides to the coin to this equation, but in this case, in my opinion, because the near-term trajectory seems to be pushing lower, therefore, I feel like volatility could continue to push lower in the future. Okay, let's take a look at a couple of commodities. Let's start with crude oil. Now, crude oil. Take a look at crude oil. Isn't this interesting? Now, we have a resistance level at $47. Once again, we were unable to cross the $47 level, so just keep that in mind. But crude oil had a strong showing today despite markets dropping. So here's crude oil, and let me take you to the intraday chart just to show you what happened. So intraday chart, what you can see is initially we we went up, and then what happened was we had a dramatic decline, but only to recover in the latter half of the day. So this is pretty good, and I always told you, in my opinion, crude oil has to be going up out of its bear market trend for the markets to have some risk-on mindset, in my opinion. So what we have here is we're still at resistance, so that's a little bit concerning, but today it was a good place for crude oil for it to rise at least. So we're looking for a push over the 20-period moving average, which is situated around $48, looking for a push above that level. So far, we haven't had that for a while, so this is a good start. Look for this to continue in the future, but right now we are at resistance. Natural gas. Now, natural gas is one that I've talked to members about quite a bit. I know members have asked me, should I take a pro natural gas position or an inverse natural gas position, or what should I do? While I'm not here to give you advice on pretty much, advice on how you should invest, remember, because this is your money, of course, you can see that it's obviously on a downtrend, right? So what we have here is down, 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 consolidate at a support, down, consolidate, down, consolidate, and what do you think is the next step? Its next step is obviously down. So natural gas continues to be going lower. Now, where's the 20-period moving average? It's still sloping lower. It's still a little far away. So can we consolidate to the right before another push down? Of course we can. So in my opinion, natural gas continues to have near-term bearish outlooks. Finally, what we have here is gold. So remember, guys, if you enjoy these videos, make sure to like the video and you want to check out the course as well, it's in the description box down below. We do much more in our chat room than talk about broad markets and commodities. We do a lot of that, but I also point out several other charts as well on a pretty consistent basis. So take a look at the course if you haven't already. It teaches you a lot of the fundamentals if you are, especially if you're new to trading or if you're just an intermediate trader trying to learn the ins and outs of the market. So here's forward/GC on the yearly chart, and what you can see is we have a definitive push above the resistance line, 1286. Now we're at 1296.2. That's a very strong sign for gold, and look for this to continue to go higher because the next resistance is at 1312 and there's still room for it to pop higher. So this was a very strong start today. You can see that after it's as it's being reflected in the ticker JNUG or JNUG. So gold is piling up, and so resistance we talked about, so it will be around 1310 to 1311, around that vicinity, but there's still room for it to push up. So look for this to continue to push higher. Remember, we've talked about gold and we've talked about being bullish when it was down here, right? When it was down here, we're talking about how gold is maintaining a more bullish outlook, and what you can see is a continuous rally back to the upside. So far so good for gold. Looking for this to continue to 1310 and then possibly to even 1350, 1360 at that moment, at that point. All right, keep it short and sweet today. Thank you everyone for watching this video. Just want to give a quick update to the markets, and of course, see you all soon. Happy trading, and thanks everyone.